Welcome once again to my YouTube channel. My name is Kingsley and this is Freedom Holdings LLC. And today we're going to talk about the basic guide to understanding trend lines in forex trading. I know that you've been trading for a very long time, and one of the most easiest strategy that anyone who is either a beginner or a pro trader can use to make money on this market is the trend line strategy. And most of the times a lot of people get it wrong. When I say a lot of people get it wrong, what I mean is that a lot of people get it wrong when they are trying to draw their trend line. So today I'm going to give you the basic understanding to trend line in forex trading. And before we even begin the lessons, what I want you to understand is the meaning of trend line in forex trading. So in trading, when we say trend lines are straight lines drawn on price chart to help traders identify the direction of the market. Trend lines are straight lines drawn on price charts to help traders identify the direction of the market. So what I mean by this is that trend line help you, the trader, to identify the trend. It helps you to know the direction of the market. So if the market is going up, let's say the market is going up, the trend line will help you to know that the market is giving you higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so now let's say we want to use the definition that we've given to determine the move of this market. And as we stated earlier, we say that trend lines, they are straight lines on the price chart. And what it does is that it helps you, the trader, to identify the direction of the market, meaning where the market is currently going. Now, what do you see on this go chart? Let me delete this first. What do you see on this go chart? The market is currently giving us a higher low, higher high, another higher low here, higher high, higher low. Let's say you don't know anything about what I just stated and you want to use the trend line to determine the direction of the market. What you need is to come here, find this line, horizontal line, this is the trend line. You see, when you point it on, it will tell you draw trend line. So this is the trend line. Mark it from the swing low, then move it up. So as you are moving it up and the line is touching the wick of the candles, if it is going up, then definitely what the trend line is trying to tell you is that the market is going up. And also, let's say you look at the market and you realize that the market is now going to the south. What do you have to do? For you to determine the direction of the market, what you need to do is just take your trend line, mark it from the top, and then move it down like this. Do you understand? So now here the trend line clearly indicated to us that the market is going up, and here the trend line clearly also indicated to us that the market is coming down. So trend line play vital role. If you really want to trade trend line, if you want to use trend line as a strategy, then you will need to understand how to draw it. So to take it further, what I will tell you, or what I want you to understand, is that trend line connects significant price points such as highs or lows. Trend line, it connects significant price points, meaning this is a point, this is another point, this is another point, and this is a low, this is a high, and this is also a low. This is a high and this is also a low. So what you need to understand is that trend line, it connects price point. Whenever the market touches a trend line, there must be a significant reaction. It is either that trend line will bounce the market, or the market will break the trend line, retest it, and either go down or go up. So there must always be a reaction when price approach a trend line. There must always be a reaction. Let me draw this trend line and then let me show you something. From here, swing it up to this zone. Okay, let me just use this zone here to identify something to you. This was where the trend started. When it got here, it bounced it, and the market traded up. And when the market go to this trend line here, and when the market go to this trend line here, as soon as it touched it, look at the reaction here. There was a lot of reaction because the trend line hold it and push it up again. And when it got to this zone again, look at it. There was also a reaction here. So that is what I was trying to tell you, that it connects significant price points. So always trend line need to tell you something. It need to tell you what is actually going on in the market. Now let's move on to how to draw trend lines. In the first example that I gave you, I drew 1 or 2 trend lines for you to see, but now we are going to really dive deep into it as to how you can draw a trend line. Yeah, so for you to draw a perfect trend line that can give you perfect trading opportunities, what you will need to do is to identify your points. You have to identify your point by finding 2 or more significant highs for a downtrend or lows for an uptrend. So now let's go to the chart again. This is gold. This is gold. So let's say we want to trade gold and we want to draw our trend line here on gold. Let's use the market structure here. Let's use this chart here to do it. Now we want to find our significant point where we will connect our trend line for it to give us the trading opportunities that we are looking for. Okay, now let's draw it from here and drag it all the way up to this zone. All the way up to this zone. Okay, so this is it. This is it. You realize that the connection started from here. When this structure got broken, the market went up, came back, retested again. Another point here, another point here, another point here, another point here. So this trend line got broken. So what I want you to know and understand is that when you are drawing a trend line, you need to connect the dots. You will need to connect what? The dots. You will need to connect the dots. Make sure that the line is touching your wicks. This wick has been touched, and when the market got here, you see this doji. After this doji, there was a lot of reaction here, a lot of doji candles, and then a bullish engulfing here. So if you want to trade this market, right after the close of this candlestick pattern, right after the close of this candlestick, you have to enter your trade. You have to enter your trade right after the close of this candle. Your stop loss will be somewhere here, and because of this is the immediate high, you can target here to be your first TP. You could look left and see whether there is another perfect zone that you can reach as your all-time high, where you can take all these profits. So when it got here, there was a good reaction here because it touched. Look at the reaction it gave. Let's move back again and let's see. Here too, a good reaction, and then the trend line was broken here. So always know where the points are so that you can join them together for you to get good trade. And then when you look at point number 2, he said draw the line. Use a tool to connect this point. For an uptrend, the line should connect the lows. For a downtrend, connect the highs. Okay, so now this is an uptrend. And he's saying that for an uptrend, the line should connect the lows, meaning that this is an uptrend. This is the low. This one too is a low. Let me zoom in for you to see clearly. This is a low. Here is a low, and here too is another low. So if we are to even go in a little bit like this, okay, perfect, you will realize that the lows here are really touching the trend line. The lows here are really touching the trend line, and when the trend lines are touched, there is always a reaction. When this touched, when this low got to the trend line, you see that it bounced it up, and when this one too got here, it bounced it. When it touched it, it bounced it, came back and retested it again. Then it gave us this strong 3 candlestick in the 30-minute time frame. So it should tell you that trend lines, it has a very important part to play when it comes to forex trading, and that is what I want you to understand. So when the market is trending up, what you need to do is to connect the higher lows. Connect the higher lows. Find the wicks, the candle wicks. There are people that use the body of the candlestick and forget about the wicks. But for me, I always use the wick as my point to connect the market with the trend line. So you need to know, as I stated, that when the market is trending up, use the lows. That is the higher lows. This is a higher low, a higher high, a higher low, a higher high, a higher low, another higher high. And when the market got here, this line got broken. It got broken. So know that when the market is trending up, just connect the lows. And when the market is trending down, you will need to connect the lower highs for you to get your trend line perfect. When the market is trending up, let me repeat it, connect the lower highs. And when the market is trending up, connect the higher lows. It is the higher lows that will give you the money that you need in the market if you connect them very well with the trend line. And so let me use this here. I will give you guys a perfect example on the charts whereby you can use it to take trade. But for now, you need to understand how to connect it. So let's say now the market is coming down like this. The market is coming down like this. This is a lower high, lower low, lower high, another lower low here. We had a lower high touch here, another lower low here, and then this trend line got violated here. So I say that when the market is trending down, connect the highs, and when the market is trending up, connect the lows. Connect the lows. Do not forget this, please. Do not forget this. And always extend the line into the future. It is very important because a lot of people will just draw the line and leave it like that. But always connect. When you get your connection right, extend it into the future. Because sometimes it might surprise you that the lines that you have extended, the trend line that you have extended into the future might serve as a support or resistance when price get there. Because always price don't move in a straight line. Price don't always move in a straight line. Know this and have this in mind, that price do not move in a straight line. Price never move in a straight line. So when you draw your trend line, extend it into the future and believe that that trend line that you've drawn will help you identify a future support and resistance zone. Now let's talk about how you can use trend line. So what I said was that trend line in an uptrend acts as a support. So now here the market is trending up, and you realize that when the market goes up, it comes back and then come and relax on the trend line. And the trend line here, this line here, let me change the color to maybe red. Let me change the color to red. Very good. Now we have a red trend line so that we can use it to really work perfectly. So now you realize that when the market got here, it rested on this red trend line, meaning the trend line gave it a support and helped it push it up again. So it got here and then the line got broken. So trend line always serve as a support. It helps the market to buy more. That is, if there is a buying momentum or the buying pressure is high. As soon as market get to the trend line, what it does is that it relaxes on the trend line, and the trend line will help it and then push it up more. I just want to come down so that if you're a beginner, you'll be able to understand what I am actually teaching. So trend line in an uptrend act as a support. Now let's go to the downtrend and see if we can actually understand what it means by saying that the trend line in a downtrend also serve as a resistance. So now let's use this structure of the market like this. Okay, like this. Okay. So in a downtrend, I said that the trend line always serve as what? A resistance. What am I trying to say? The market sold to this zone and it was trying to buy up, but when it got here, the trend line resisted the market from going further. So you realize that when it got to this zone, it resisted it and pushed it down again. And then here you see this strong buying pressure here. And when it also got here, it tried to penetrate through, it tried to break out of this trend line. But the trend line also, what did it do? It resisted it and pushed it down again. It pushed it down again. So always understand that in a downtrend, when you draw your trend line, what the trend line over there is trying to help you know and help you to understand is that, look, I am resisting the market. I don't want the market to go any further. So when you see the market getting to this to a zone where there is a trend line, always watch the reaction over there. When you see a lot of rejection and then a buying or a selling pressure begins to come in, you have to know and understand that it is either the trend line is rejecting it or the trend line is supporting the market to move further. Okay, so that is it for today, and thank you very much for watching this video. Remember to subscribe to the YouTube channel. Remember to hit on the post notification button. Remember to like and then comment. Once again, my name is Kingsley and this is Rhythm Holdings LLC.